Thank you very much. Thank you for that introduction, and good afternoon, everybody. As said, my name is Koen Terwal. I am the head of technology and operations at the Association for Financial Markets in Europe, and very, very pleased to be moderating this panel on how tokenization and DLT are changing capital markets. We already talked about breaks. I'm painfully aware that we're the last panel standing between you and the lunch break, which is not an enviable position to be in per se, but I think it will be really worthwhile for you to sort of hang on for another half an hour, because I think you'll come away with this from this panel with a real sense that momentum is growing with respect to tokenization in capital markets, and also with a sense of what to watch in this space over the next 12 to 18 months. So we'll be talking about what are we seeing in tokenization. We'll also be talking about what can we expect from 24 and 25, and very concretely what steps are being taken and still need to be taken in order for that momentum to really continue. We'll be doing that with a great panel, which basically covers the entire ecosystem: buy side, sell side, data providers, standard setters, etc. So I'd like to start by asking the panel members to briefly introduce themselves, and perhaps I can start on the far side with Philippe.
Hi, good morning, everybody. My name is Philippe Redaelli. I'm working with Kaiko. Kaiko is a data vendor in the digital asset space, and myself, I have the past in traditional finance because I was General Secretary of exchanges within the Deutsche Börse Group as well. So crossing with digital assets. Thank you.
Hello, my name is Emma Lovett. I work at JP Morgan in the markets DLT function. What we do is we're a function that actually sits within markets, reporting up to the head of markets trading, and we're looking at how we can insert DLT technology to make trading products more efficient.
Hello, everyone. Happy to be here. Marat from Moody's Ratings. So I'm part of digital finance team at Moody's. So what we do, we support credit ratings when they have to rate digital securities issued on blockchain. And we also work with potential integration of blockchain technology into our operations.
Hi everyone, thanks for having me. I'm Pauline Moisan. I'm working at AXIM, which is a global diversified asset manager, and I'm part of the innovation team, which is responsible for strategic initiative having a transformational impact on the organization. And we have a particular focus on new technologies, and especially the disruption of capital markets through the use of blockchain technology.
Coen, many thanks for having me here. Christoph Hock, Head of Tokenization and Digital Assets at Union Investment. We are a large European-based asset manager. Most recently, we've set up new governance on blockchain DLT, and we've set it up as a cross-function across the entire firm. So we have our marketing units involved, real estate portfolio management, IT department, administrative units, and focusing on the one hand on infrastructure when it comes to blockchain DLT, then on products, and most important, client interface.
Okay, great, wonderful, thank you all. Great panel. And Christoph, you mentioned governance and buy side. I'm sure we'll get back to that at some point. But maybe we can start with sort of first principles by answering the sort of age-old question of so what? Why should the audience care about tokenization in capital markets? Now, we already heard a number of benefits of tokenization in previous panels, but can you maybe sort of paint that picture for us of what tokenization could do for capital markets, let's say in 5 years? Like where could we be, and what would the benefit be?
Yeah, more than happy to do so, Coen. And I think when looking at token economy, when looking at tokenization, it's important to look from a helicopter perspective to have really the big picture. So it's not about taking traditional assets and trading them going forward in a tokenized format. It's not about just a few POCs. From our perspective, token economy, i.e. Web 3.0, has really the potential to act as a highly disruptive element for the entire financial industry. And looking 5 years down the road, there's a big chance that the entire industry will have a completely different phase actually. And when digging a bit into history, so looking at Web 1.0, start of the internet, end of the 80s, beginning of the 90s, it was just about submitting information. Then a decade later, when looking at Web 2.0, platform technology, companies like Amazon, and also social media, it was not about the read, but it was also about the write function. And what makes token economy Web 3.0 highly attractive for the financial industry, it's not only about read and write anymore, but the execute function is also included, and that's what where we are as a financial industry involved day in, day out. And looking at tokenization, I mentioned it before, it affects on the one hand our infrastructure from a company perspective, it affects the products, and most important, the client interface, smartphone, wallet function, and also including not only assets, but cash on chain is a key theme, as we've discussed it here at this conference so far. In 5-10 years time, as a client, you will have one wallet, you will have 24/7 trading, you will have atomic settlement, meaning when purchasing some goods, you can immediately sell parts of your assets real time and submit then the cash equivalent to the retail store. And looking at the products from an buy side perspective, actually two roles we have. On the one hand, we are issuer of fund shares, which going forward can also be tokenized. So here we are talking about the wrapper in tokenized format, but on the other hand, it's also about tokenization of the products we invest in. So from our perspective, radical change, it will come with significant benefits for the client, and that's we are a service provider for our investors actually, and that's most important question, what's in it for the client? We are not doing this implementation of blockchain technology because it's a fancy technology. At the end, we really want to deliver a better service to our investors, and better service means we have quicker transactions, we have less risk, and actually it will come at lower cost. And when talking about lower cost, we have lots of oligopolies in the financial industry, regardless whether you look at the issuance process, regardless whether you look at secondary market trading, regardless whether you look at central depositories, CSDs. I guess all of us, we know when looking at oligopolies, it comes at a high cost, point number one. Point number two, with less innovation. And therefore, it's fantastic to see, as a part of token economy, also new roles in the ecosystem, kind of speedboats. We will live in a decentralized world going forward, looking at blockchain. And at the end, as mentioned, significant advantages for our investors.
Great. So literally a new face to the industry is what you're saying, new players, etc. Does anybody want to add anything? Because it sounds like a...
Yeah, I agree with Christoph that main point is that clients have to see interest in tokenization beyond only technological testing, but we are really convinced that the entire value chain and the whole ecosystem will benefit of such technology, because it will be at the end of the day a collective and efficient new operating model, and we will have benefits all across the value chain thanks to tokenization, as mentioned by Christoph. So I agree with that.
And it sounds like you share my son's vision, who thinks when he turns 18, he won't need to hold any cash, just tokens in Chelsea Football Club.
That is a frightening but interesting future indeed. So we've seen the future, and it may work, and it sounds great for sure. But let's bring that back to sort of the here and now a little bit more. So what are we going to see? What is going to be the big thing for 2024 and 2025? It's a very broad question to ask. But maybe, Pauline, I can start with you. What are you seeing, for instance, from the investor side, on the buy side? What is it of interest? What asset classes are gaining momentum, etc.?
I will start maybe with an overview. For this year, what is in the spotlight, we hope to see some DLT trading platforms with the EU pilot regime. We'll have also the opportunity to participate as investors in the UK Digital Security Sandbox, but there is also the MiCA that will kick in Europe in June. So there is a lot of work done on the regulatory side, so it's a good sign for the investors. And we have also something important to mention is the exploratory work done by the European Central Bank around the wholesale CBDC. Together with the central banks of France, Germany, and Italy. So we are really much interested to see what will be the implication of such waves of trials around the wholesale CBDC, because we know that on the asset side for investors, the full potential of automated life cycle will be reached with the cash on chain, whether it's a CBDC, regulated stablecoin, or settlement coins. So that's important steps for the very near future, because it's in 2024. So.
Right.
Yeah, so I think that there was obviously a lot of market volatility last year, sort of overall, and perhaps we didn't end 2023 with quite as much progress as we thought we might make, sort of across the industry. But I do feel now that it's very much a sentiment of when, not if. Particularly when you're looking at the advancements that have happened this year in the digital bond space, as well as the tokenization of money market funds, and also intraday repo. You know, it feels like it's not just one or two market players that are adopting these, but it's much more widespread. Now, I think we're still at the beginning of the journey. These products aren't off the shelf yet. They still are initiative by initiative. But it very much feels like the sentiment has changed. Lots of people are now sort of recognizing that this is something that they need to learn about, start the journey, get on board, rather than it sort of being the other way around and, you know, us as banks sort of trying to prove why we think people should be on board. You know, it feels like the sentiment has really changed this year.
Maybe I can add here. We also see some subsequent issuances, right, which is also a positive sign. And maybe the first one has been like more POC in nature. The second one becomes a bit more complicated, structure is more complicated. They may use some CBDC or something like that. So if subsequent issuance happens, it's always an indication that the market is kind of leaning towards something.
I just want to, because I think, Emma, you made an interesting point where you said, well, obviously we're seeing fund tokenization now really kicking off. We're seeing bond tokenization. I think if you look at DLT-based bond issuance volumes are now, to date, 24, already exceeding 2023 totals. So that's quite an interesting and substantial increase. What do you see that trend continuing over this year, next year? And what are sort of the factors that could help it or could sort of potentially, what will drive that movement?
So I do see that. I think that is the trajectory, and I think that Pauline has highlighted some of the, particularly around the regulatory landscape, that I think is sort of becoming clearer. I think that, as Christoph has highlighted, everybody wants to progress in this space by meeting a demand for their clients. And if there are more clients and investors demanding these products, then the issuances will follow. And I think that we're at a point of time now where that is, you know, starting to happen in a much more sort of mainstream way than it was maybe 2 years ago.
Do you see that momentum as well? So we talked about sell side, we talked about regulatory momentum. Do you see on the buy side a real momentum for wanting to be involved in this as well?
Yeah, I think with a higher number of issuances, we will see going forward more and more involvement from the buy side. So about 2 years ago, the question was, is tokenization, digital bonds, is it something someone should get involved? Is it just a hype which will disappear at one stage? As Emma was alluding to, I think nowadays no one questions anymore whether blockchain DLT technology will become a success factor, a game changer for the industry. The question is not if, but when. And I think it's important on the one hand to be patient. So again, when looking into history, Amazon, when my example, 2.0, when Amazon started back in '97, they started selling books online. Everyone was questioning, why on earth do I need to purchase books online? I've a bookshop here around the corner. So meaning it's not really a short-term business case you can monetize in 6 or 12 months time. It's definitely an investment, investment of money, investment of human capital, of brain. We have to put into this in this context. But on the other hand, I guess the industry will, or companies not getting involved at this stage, they will run the risk of being overrun. So we have a number of fintechs, smart fintechs in this area. We have lots of TradFi already involved, and I wouldn't be surprised to see a kind of fear of missing out element at one stage kicking in. And here in our group, we mentioned lots of catalysts kicking in now in 24 and in 25, and I'm sure we will see a kind of hockey stick evolution, a kind of elevating growth we will see for the next 12 to 18 months.
Right, and maybe just. So we talked about bonds, we talked about funds. Any other asset classes that you think we could start to see in 24 and 25, or do you think it will be mainly those two that will sort of grow and sort of lead the rest of the capital markets, let's say? You mentioned repo as well. Are there any other asset classes where you see potential?
I think in the near future we will continue to see number of digital bonds to be issued. We will see a digital fund, money market fund tokenization also. We have seen recently the launch of the BlackRock digital fund on Ethereum. So we have different message on the market. This one is a strong message because BlackRock chose a public blockchain Ethereum to launch his digital fund. So yes, I think bonds and digital funds are the main trends for the near future, but we will see maybe real assets, tokenization, or other assets.
And end-to-end on-chain investment, is that for the short term, or what do you think? Will that take more time?
Yeah, I think at the moment we are looking at tokenization of traditional financial assets, so fixed income products, equity stocks at one stage, and also fund shares. I guess jump into the future, tokenization can deliver significantly more. It's not a kind of smart copy-paste of the existing infrastructure we have now. But via tokenization, we can deliver completely new products to our investors. And I think that's something for the medium to long term. So looking at ESG, looking at infrastructure topics, at the moment, we are also focusing on tokenization of real estate. And the really fancy thing, so to say, with a token is you have a fractionalization. And at the moment, you have for certain type of products, extremely high thresholds, barriers, especially for retail investors to get involved. And therefore, tokenization will also lead to a kind of democratization and also individualization of investing, especially for retail investors going forward. And I guess most of us, we can't imagine what will be possible via tokenization in 5 to 10 years' time. So the investable universe for our end investors will expand significantly. And that's really the most important factor. At the moment, we are talking about optimizing processes, efficiency gains we will pass on to our investors, but as I said, the real juice will kick in when we have completely new products accessible for retail going forward.
And I agree with that too. So For example, our digital financing product came about from a need to be able to repo money intraday, which of course you can do using blockchain technology because you can specify a settlement time as opposed to a settlement date. Within traditional infrastructure, you have to borrow overnight as your only option. And I think that was one of the first sort of quote unquote front office business use cases. A lot of the blockchain technology sort of emphasis has been on operational efficiencies, which I do think are well overdue and will really start to proliferate the use of this technology. But I think as it starts to infiltrate, particularly within the financial markets, into more and more products, we will have business use cases that we can't even think about now, we don't even know about now. And over time, they will become clearer, much like with your Amazon example, where, you know, it started out selling books. Now you can literally buy anything from Amazon. But you know, I don't even think Jeff Bezos had that vision necessarily back in 1997.
So basically what we're saying is next year or two, we will likely see traditional financial instruments, bonds, funds, repo you mentioned, but they will scale and they might become more sophisticated as we go along, more standard. Yeah. That raises, of course, the question of, okay, what steps are being taken or need to be taken in order for that momentum to continue? And I would just like to ask every one of you in a word or a sentence to say, what is the number one thing that you think either is being done or still needs to be done, or both, to make that momentum a reality or continue to grow? Philippe, could I?
Standards.
Standards.
But to give an explanation, it was extremely interesting to hear the industry giving the views on how the market is going to develop. I'm speaking from a service provider, ancillary to the core functions of the financial industry, but totally necessary, like the rating, data is all data driven. So I wanted to testify that many things are being done on that level to make it happen, very concrete things. And if I can drop names, if you allow me like 30 seconds to drop names, if you can't identify the financial instrument you're talking about or you're tokenizing, it doesn't work. Well, ANA, which is the responsible entity for ISINs, and DTIF, which is the responsible entity within ISO for digital tokens, they have come to an agreement on how to combine the identification of an asset together with its tokenized representation. So if you got one issuance, for instance, circulating on different blockchain environments, I don't know, JPs or others, at the same time, well, they can be identified. That's something that will unlock things technically. Let me be quicker on other things. ICMA, which is the industry association that standardizes contracts over the counter for bonds and repos, they've just extended their bond data taxonomy to DLT bonds. It's a very rough version, very first step. They still have to modelize the issuance process, etc., but it's there. So now if experiments use that, for instance, there's a guarantee that it's interoperable with other peers. I can quote ISDA, for many years has been working on smart contracts, trying to isolate in their standard agreements what's machine readable and executable from what still requires human intervention. And new definitions have been issued already 2 years ago or 1 year ago. They are working on expanding a data model called CDM for Common Domain Model. So this is being done as we speak with working groups within industry associations, which I encourage everyone to join, basically. Based on that, platforms like the one you're developing, frameworks like we're working on a CAST framework from Société Générale Forge, modelization of financial flows like the Actus data model. These are things happening now that make it possible. So to answer the question, standards, to me, is one of the enablers for the next 18 months that will make the industry able to go at scale.
Okay. So standards is, maybe in a short
I'm going to use the word that Philippe couldn't because he was only allowed one, and say collaboration.
Very good.
Because what you were talking about.
Endorsed.
I would say regulation, because we see that the issuers of tokenized funds and digital bonds, they actually face this hurdle, navigating through different regulatory regimes. Even the BlackRock tokenized fund, I don't think it's registered in the US. I think it's registered out of British Virgin Islands, right? Because the regulation there is more open to such products.
I will go also for collaboration. As an asset manager and investor, we can't go it alone. So we depend on our partners, especially the custodian, and we need all the roles of the whole ecosystem to be clarified. For example, the proof of ownership of a digital asset lies directly in the technology. So the role of a CSD will no longer be the same. So collaboration to define an efficient ecosystem on blockchain.
If I may, Coen, 2 points from my side. Point number one is education. And I think it's currently a matter of fact that we just have a number of specialists, experts being on the blockchain DLT on the token economy topic. And we really need to deliver the story into the breadth of the financial industry. That's applicable for us as a buy-side firm. That's applicable, I think, for the entire industry. In this context, I would like to make some advertisement on a webinar we've started publishing yesterday on tokenized bond. It's on LinkedIn, where we try to go through the entire value chain of a tokenized bond. So education on the one hand, and looking at collaboration. What was mentioned here, I think we are currently really privileged to reshape the financial industry, and all of us we have the obligation, regardless whether regulators, central banks, Ministry of Finances, buy-side firms, sell-side firms, platform providers, other vendors, we all have the obligation, really from a capital markets union, from a European perspective, to collaborate and to work on creating this ecosystem. I guess in the financial industry, we have so many topics where we lost out against Asia, against the Americas. We mentioned in previous panels AI, we mentioned cloud technology. And here in token economy, we really have the chance with a fantastic talent, with a fantastic governance we have here in Europe to become leading in this context, and that's where we all have to collaborate.
Okay, it's a very inclusive message. So collaboration, I hear, obviously standardization, etc. One that I didn't hear, which surprised me a little bit, was cash, because of course we're talking about financial instruments and assets. They have to be settled somehow in cash. We're seeing obviously experiments going on in the euro system and elsewhere. Can you say a bit more about what do you think needs to happen in the cash space over the next 12 months or so, let's say, to really support the scaling of markets? Anybody?
Yeah, I can take this question. So in terms of digital cash, it's actually, as you mentioned, it's really required for the settlement, right? And now there are different products that are being used, and issuers, are trying to put themselves like, which solution do I choose? And it's a very complicated question. So on one side, you can take a stable coin, but it's very probably efficient because you can use it anywhere, in different systems. At the same time, it may lose its peg, so it's quite volatile, and plus it's not regulated in most of the jurisdictions. We, from our perspective, think that having a CBDC, wholesale CBDC compatible with systems will be like the very secure product to use in such systems. At the same time, depending on how it's realized, you may still need to have kind of cross-chain DVP mechanism to make it work, or even bridge it to, let's say, public networks, right? If you want to use some permissionless blockchains. So it also may have some technical hurdles. And of course, from the risk perspective, the most secure still is like the traditional fiat transfer, but it doesn't really add any efficiency to the system, right? So you still need to manually trigger or semi-manually trigger the fiat transfer, which is not really helpful in this case.
Doesn't really help scaling, indeed.
I think, Pauline, you mentioned the exploration phase of the ECB beforehand, and hopefully the outcome is that the experiments around wholesale central bank money with the euro will be successful, and this really would be one of the key next steps. We mentioned beforehand 24/7 trading, we mentioned atomic settlement, and to raise all the efficiency gains, we do not need assets on chain only, but cash on chain is a key element which definitely has to come.
Another area I wanted to raise quickly in our final moments or final minutes is you all mentioned collaboration, and yet what we have seen in the ecosystem is fragmentation to some extent, right? Walled gardens, et cetera, Philippe, you mentioned standardization, interoperability. Is now the time to look at that, or do we focus more on more issuances, et cetera, to create scale before interoperability is being
I have a saying in
achieved?
France, les deux, mon général, both, my general. Of course, there needs to be more issuances. What's important to realize is that there are forums already where the financial industry gathers for years to collaborate and converge. It's not easy. The bond data taxonomy I just mentioned took years to be achieved. How do you name nominal, people come with different things. So forums are there. I can't not quote your own association, AFME. It's doing a wonderful job. And if you look at the landscape of trading associations, including those emanating from the Web3 or DLT world, what I see in working groups is the start of a convergence of works being done for the emergence of that ecosystem, i.e. Association from the financial industry start to talk to bodies representing Web3 and vice versa, so there's more understanding, reciprocal understanding, and there are forums to make all those questions happen. What's hard is not a short-term win. So if nobody addresses it, standardization, it won't happen. So it needs dedication of time and investment of money, as you said, Christoph, before.
And just a word on interoperability. We agree that I agree that interoperability is key, and we are talking obviously of interoperability cross-chain. For example, on a blockchain supporting the asset leg and the other one the cash leg. But at the moment, we have also to look at the interoperability between DLT and the traditional world, because we probably remain in a hybrid world for quite a time, where crypto actors and traditional financial actors will coexist.
Okay. So we're out of time, unfortunately. What I remember is that a lot of steps still have to be taken, obviously, and are being taken, but also that momentum is growing and that we can expect quite a number of very interesting and fascinating things to come out of this over the next year or two. So on that happy note, I'd like you to join me all in thanking our panelists. Thank you.
Thank you.